Well, hello. Happy Saturday, April 11th, as I record this update for my favorite people, the people that follow me in trade planning and stock analysis. If you get something out of this, please like, subscribe, and follow, but more importantly, share it to somebody so we can spread the word. Um, let's get into it. Let's talk about some of the things that we saw occur this past week, uh, different catalysts and whatnot. So the week was April 5th through the 11th, was defined by a dramatic risk on reversal and geopolitical tensions eased as the ceasefire was announced, right? Um, so with the ceasefire, the biggest market driver was the ceasefire between U.S. and Iran on Tuesday into Wednesday. After a month of conflict, oil climbed above $110 per barrel, but prices plummeted back to $95. And we'll get into the charts on that. That triggered a massive relief rally, and the Dow Jones jumping over 1,300 points. S&P went up 2.5% in a single day, and inflation fears cooled a little bit. We'll get into the charts and show you that. We also had this past week March Consumer Price Index. That's the CPI that released on Friday from the Labor Department. The data showed a significant jump in headline inflation, largely due to energy shocks from earlier this month. While the ceasefire raised immediate concerns, high CPI print reminded investors that the inflation hangover from the Strait of Hormuz closure will likely persist and shipping and transportation costs will be up for months. So keep an eye on that. Now, the numbers did come in line, but the numbers were higher, right? They were higher. Um, there's been resilience in the data, the labor data this week. Earlier in the week, the market processed a better than expected March jobs report. Total employment increased by 178,000, and the unemployment rate dipped to 4.3%. Release of the FOMC minutes. Remember when Jay Powell talks, and then a week or two later they dropped the minutes. Really, nothing came of that, but it kind of provided a hawkish backdrop. And more than likely, stagflation is at risk there, guys. Stagflation is not a good environment to be in. We had sector rotation this week. We saw a sharp reversal in uh, sector leadership as oil prices fell. Energy sector, which had been the only meaningful gainer in all of March, began to lag. Conversely, information technology and communication services led the rebound. Investors gapped into AI-heavy stocks like Alphabet and Meta. Again, Mag 7, like we talked about, right? Viewing the previous month's sell-off as a macro-driven buying opportunity for tech fundamentals and remain detached from the energy thesis, right? Remember, in the last report, I said that tech adjacent stocks suffered the most. So that's where discounts lie. So overall, the S&P is up 3.4% on the week. The Nasdaq's up 4.4%, and oil dropped 13.6%. What can we look forward to in the coming week? Q1 earnings kick off with the banks. JP Morgan Chase, Wells Fargo, Citigroup, and Bank of America and Morgan Stanley all report by Wednesday. And why that matters, investors want to see higher for longer interest rates are impacting net interest margins, and whether the recent oil price spike led to a slowdown in consumer spending or an uptick in credit card delinquencies. So we're going to keep an eye on that. We have PPI. Remember, CPI came out last week, PPI coming this week. That is the March Producer Price Index, and that comes out on Tuesday. Uh, it matters because while CPI showed what consumers are paying, PPI will reveal how much of the energy and shipping cost spikes from the Strait crisis are being absorbed by businesses. A high print there would suggest that consumer inflation will remain sticky for months to come. And guys, I don't see how it doesn't remain. Remember, it's going to be a lag with as much supply that has been affected. There's going to be a lag. Um, Other than that, reopening of the Strait, if in fact it gets completely reopened, I mean, if there's conflicting reports, are they not letting ships through? Are they charging ships or whatever? But oil prices have dipped on a confirmed safe passage for 150 plus vessels that usually traverse the Strait daily. That would provide some downward pressure needed to bring oil back to 85 to $90, and then global shipping should surge, and then there'll probably be surcharges. So also the IMF is beginning their meetings that's the International Monetary Funds. Why that matters is it will provide the first comprehensive look at global growth forecasts, which have been downgraded following the Middle East volatility. Any significant cuts to growth projections for the Eurozone or China could weigh heavily on U.S. stocks, and we'll keep an eye on that. So let's get into the charts, guys. Those are the catalysts that we've experienced and perhaps looking into. And again, guys, as I get into this, remember, this is how I see things as a certified research analyst. This is not financial advice. Do your own due diligence. See if you can get your charts to line up with mine. If you choose to buy or sell along with my trade plans, that's solely on you because trading includes inherent risk, and that includes risking an entire loss. So keep that in mind, guys. The idea here is to educate you. This is education and entertainment only, so that you can begin to do this for yourself. Let's get into the NAS. Now, before I do the NAS, we've talked about the New York Stock Exchange McClellan Oscillator. I was on it all week. It hit about 65 and cooled off just a little bit because we were overbought. Anything above 60, we're overbought, and you expect a pullback. And you can see this. The last time we were that overbought was back here a year ago. We pulled back, ramped up, and then sold off. Now, does that mean the New York Stock Exchange is going to replicate that move? No, but it often rhymes. Not replication, but rhyming. So we could see a little bit of a bounce and then more sell off to the neutral position of zero. The NAMO, which is for the Nasdaq, the Nasdaq McClellan Oscillator was approaching oversold at 60, hit about 54, 55, and has cooled down to about 39. We could see a slight lift before a sell-off now that they both cooled a little bit. And interestingly enough, the VIX is into buying now. So remember, sub 20 is buying and less fear. 20 to 30 is fear. Above 30 is mass panic. So we have 19 being like very slow buying, right? 20 begins very much slow selling. So we're right at that threshold. Cooling down to 15 to 16 would shoot these markets up. So anyway, the Nasdaq, since our last meeting, guys, let's get in there and analyze it. This is now support. Let me change that color. So we did hit the all-time high anchored VWAP, and then it sold down and we closed above it. So this is a 2-day close above the all-time high anchored VWAP, which is located right here at 25,000. Now, that is a buy signal, but we're doing it on lower volume. So the question remains, we have another week left of this ceasefire. I don't see us breaking all-time highs unless everything ends, right? Do have some folks that took a short position at 25,000 with a stop loss at 25,300 and are looking to get 400 to 500 points out of that short just on a retracement due to the overbought conditions. So something like that. I did enter this short in equivalent pricing in NQ and got kicked out. So it took a loss there on a swing play. But if you followed me, I have swung this multiple times on shorts and done very well. So again, technically that is a 2-day buy signal above that. You could go long here. I think I would wait to see. You could start to position because we're at a battle point here between longs and shorts. Are we over bought where we're going to drop more, or is this a clear signal that we're going to run up? I would like to say on all these, we would clearly run up if everything gets finalized with Iran. So we'll see. SPX. Okay, we had that gap open, and you heard me give the numbers. There's the all-time high anchored VWAP. 2-day close above that is actually a very positive sign. We are going to run into resistance right up here before we hit this field. Again, I don't think we see 7,000 until the conflict is settled. What I'm looking for actually this week is some mild retracement, and obviously a retracement to 67.70 would not be ridiculous. Just on a mild retracement, allowing these oscillators to cool off, but remain bullish. And then our discount zones are still in effect below that. And you can see that this price lift changed the trajectory of the 50-day EMA above the 200s because we were looking at a potential cross if price kept declining into what is known as the death cross or bearish period. The Russell 2000, strong cross above the all-time high anchored VWAP and then a hold. It's hit this consolidation zone as resistance. That's why those wicks are being thrown in. And again, I don't think we see all-time highs until if you want to play any of these indices or indice adjacent plays, I would watch the all-time high anchored VWAPs for buys, right, on all these. Okay, near term, because I think we're going to have a mild retracement. If the retracement's mild, the all-time high anchored VWAP holds. If it is more severe retracement, maybe to a negative catalyst, because remember, we are pretty overstretched. We get a negative catalyst, that means this could drop pretty hard. Negative catalyst meaning Trump says no deal and we start bombing again. I think we see a severe, not only with the rubber band being overstretched, we see a severe reaction. So always have your positions with a stop loss. So if you're going to play any adjacent longs, then you can buy in around that and then have a stop loss that is comfortable to your risk in case it breaks, right? In case we do get that negative catalyst. So you're protecting your portfolio, right? So it'd be only a smaller loss. Bitcoin's doing nothing but running sideways. Trade plan still in play, 59,000 to 60,000 TP at the all-time high anchor VWAP at 100,000. I don't see us breaking that this year. I don't see it. Go back and watch my other videos. WTI oil. So oil is range bound in that gap, the gray box. We're up and down in there, but overall, if the Strait of Hormuz is opened, you're going to see this thing drop. The buy zone on this is 88 to 89 with a tight stop loss if we're still in negotiations, right? I think price is just going to oscillate in there. If you can catch a wick down to the all-time high anchored VWAP at 84, that would be and remember, it's a buffer around it. That would be a buy as long as there's not a deal, right? So selling 100, actually this should be a red box now. Selling 100. Anytime we see it, right? And oil futures did exactly that. You can see the zone, buy zone in there hit there. It actually hit twice if you go down to the hourly, and it did very well. But then selling 100. So futures is buying 90, selling 100. Remember, you could be a dollar above and below that. All right. So, but overall, when this is finalized, we're going to teleport back down to probably 80 to 75 in futures. Let me see what that would be in WTI. Yeah, probably the same. I think we're going to drop. We'll drop pretty drastically, but it'll stay higher than what it was before the war because of the lag in the shipping. It'll take a while for it to cool all the way back. And the promised sub $2 a gallon of gas is a ways out from what Donald Trump promised. So let's look at those are the indices and some other things. Let's look at stocks. Google, guys, had a gap up with the indices gapping, and then we hit some resistance. Again, if you see that only a slight pullback's going to come in, because we're going to have timing of if we get the indices or the oscillators to cool down, and then we get the positive catalyst that the Iran deal is finalized and there's going to be some sort of treaty signed, we're going to have a more shallow drop. Remember, you can use Fibonacci's to measure that. So, in around $300 is really good for Google. You look at 306 as the all-time high anchor VWAP. So I've been on record saying it, so I'm just going to repeat. I think Google is going to be a pretty good winner in 2026. Microsoft, I eliminated a couple things and I brought Microsoft in because the thing that I want we had a death cross in Microsoft. I don't think we had it in Google yet. No, it's clearly bullish. There's the 50 is purple, the 200 is burgundy, but Microsoft did. We're in a selling period. So what I want you to watch is this trade plan that I put out last week. And actually, let me do my vertical line. So since my last report, if you ever put a vertical line on your chart and then you can move it to the back, visual order, send to the back. There you go. That way the candles stick out. I like this IPO anchored VWAP purchase, which is currently 37 or 317. So anywhere down there, I think it's going to be a good buy. And then of course, IPO to all-time high anchored VWAP. If we get a return somewhere in the middle of that trade, we should get a nice cross back over the golden cross. So keep an eye on Microsoft, and you can see we've set an alert at 325 to let us know when price gets close to that, and I'll be on top of it in the report for you guys. Oklo, nothing going on, guys. You're going to hear that in a lot of these plays. Death cross. Best trade plan is we need to regain that IPO anchor VWAP at 58. Any buying below that is strictly fundamental. M&P, now there's a lot of talk that China is switching from buying U.S. bonds to gold. So if that's true, your gold adjacent stocks will start to run. If we do fall, I like the IPO anchored VWAP buy, but you can see this zone, this green zone was created from this gap, and we tapped it and then ran back up. And know where that all-time high anchored VWAP is, which is always red on my charts, and I have an alert set on it. So, and you can see how close the death cross came on this. It's actually, if price runs up, we're going to ricochet and not have it occur. So keep an eye on that. You either buy the cross of the all-time high anchored VWAP and confirmation of the hold, or you demand a discount somewhere down in here. BBAI is still falling. I'm only interested in this $2.50, give or take 15-cent range. We'll have a death cross in there. We got to let it discount. Pony, same thing. It's got a death cross in there. And this next zone I'm interested in is way down here at $4. These AI stocks are just getting obliterated right now. So fundamentally, there are buys down here. Technically, we have to wait for the bounce. QBTS is hanging on by a thread right around that IPO anchored VWAP in the trade plan that I put out a couple weeks ago. So it's still flirting with that, buying in around $14 range, give or take, 75 cents or for the entry, and then risk tolerance to your liking, and then TP up here around all-time high anchored VWAP, and you're going to have a resistance zone in the middle. So QBTS is hanging on. I did get kicked out of this on that candle. So I own none right now, and I owned a lot, but I took a nice profit. IonQ, same thing. We're failing the IPO anchored VWAP. We failed it all week. Multiple tests, we couldn't climb above it. If it climbs above it, you can buy that and then use this low as your stop loss, or tighter. You can come into one of the other wicks. And of course, IPO to all-time high anchored VWAP. There's your trade plan. Keep an eye on that. So you want to buy closed filter, meaning the candle closes above and on the daily of that price, which is currently $30.33, and then put a stop loss to your liking. And then the all-time high anchor VWAP is 48 right now. QUBT, she's trying to turn, coming right into my green box we built for you guys a couple weeks ago. So it turned right above it. We are in a death cross. I'm going to demand a discount. I do have an alert set at $6 as it approaches the zone or enters the zone. We'll consider a buy, right? So we're looking for technical support off of this area here, right? These two positions. You can see this one held right there, right? Are you just making that up, Sean? No. Price sets your first support and resistance. Price with volume, and then all indicators after. Everything else is a laggard. It held the 200 EMA. It's trying to reclimb. Remember, we put out a trade plan last week to buy off the 200 EMA or the all-time high anchored VWAP. So your buy exists around $16, give or take, or 21, right? If you want to wait for confirmation. Buying at 16, you could exit at 21 or try to endure that chop that's going to occur as it breaks through. If we break this bottom green box, this will end up being a double top and not a cup and handle, and then down it goes. This green box at 12 and some 12 to 13 should be pretty strong. As you can see, the uptrend is still intact, even though you can see it was pretty high beta there for on this chart. So keep an eye on UUU energy. Trump's administration likes nuclear, so we've been on record saying that it should benefit. It's just a matter of getting and staying in entry. Ego, miners, you can see our trade plan hit, and we're currently bought into this zone right off of this price rejection and then price confirmation, and perfectly here. right up, and then we're trying to run that to the all-time high anchored VWAP at 39. And as if that happens this week, we'll talk about raising our stop loss. Right now, we're more than 50% in the money. Now's a good time to go break even on your stop loss. HYMC, same thing, trade plan hit. Actually, TP1, we, look, guys, do you think it's an accident that price touched that all-time high anchored VWAP and stopped there? That should tell you I'm not making this shit up, right? So that would be TP1. If you're trying to hold it through to all-time high or subsequent high, lower highs, then you're going to have to endure kind of this bounce here. But at this point, I think you need to be break even. If you bought, off of this 30 to 32, I would go break even for sure, in case it pulls back, and you could maybe get another entry. But that'll zero risk your trade, and then hopefully you get more volume through this. And that all-time high will not break unless we get a nice green volume spike like you see on that sell volume spike. All right. So let's get into gold. Gold lifted and then early in the week and then kind of stalled out towards the end of the week and channeled. You can see we nearly ran up and tapped that all-time high anchored VWAP, folks. Not by accident. It's going to be pretty tough skating to get through this right here. First attempt, we're going to have to do it with volume. So what is going to probably happen is we're going to come up there, try to break it, give a discount, and then try to run through to 5,000 is going to be the next point. So we're going to look at, and we're going to keep an eye on it, what the retracement is, and then confirmation of turn watching volume. Optimistically, I think if we get a retracement, 4,600 is the current buy, or even tighter at 4,700. Why even numbers? Because the psychological prices. But after this drop here, right, we are in an uptrend. See that? So keep an eye on 4,700. We definitely have resistance right here at 4,870. And just before 4,900, 5,000 is going to be another sticky point. So we have, this actually should be red, folks. I've seen some predictions that gold will be at 6,000 by year end. We'll see. There's some conditions that'll have to occur for that to happen. But right now, until proven otherwise, since for the last month, we're in an uptrend. Let's see what it does at the all-time high anchored VWAP. Silver, same numbers. All-time high anchored VWAP at 80, 71, and 64. So right now, if you think it's going to trend upward, look for a 71. You can see 71 through 71.50 buy. Try to run it to the all-time high anchor VWAP for a shorter trade, or try to hold it longer, right? If we get a deeper discount, watch that $64 range, which not by accident is at the 200 EMA, and then a deep discount on severe manipulation. I still contend is 54. So there's a couple trade plans for you. I wouldn't necessarily short this all-time high anchored VWAP right now, as it looks like metals want to move up, but we'll keep an eye on that with conditions, with catalysts that come out as we approach that price. Platinum, put a trade plan in there for you. Look at how it's paid, buying 1,900 and then running it to the all-time high anchored VWAP. Look where price stopped. Can you guys see that? Can you see where price stopped and then got rejected? Again, these indicators that I use, that I teach, and you can reach out, you can DM me, and you can buy my courses to help learn this, folks, to make yourself be able to build a chart like this and make educated trading decisions. The accuracy of the math in this is just uncanny, isn't it? Okay, so the next discount range is 2,000. On a pullback, you can see we closed at 2,026 and certainly 1,900. If we drop to 1,900 or near 1,900, that does not break the uptrend. Okay, so as long as we're setting our low, our higher low, and if we tap into that, that's a higher low like that, we're still uptrending. Right. So, but 2,000 should have a tight stop loss, maybe 15 points, and so would 1,900 if you're trying to trade it. If you're trying to hold it longer, you can go a bit wider, 25 to 50, but manage your risk, folks. I teach risk management as well. You can reach out and buy my courses there. Although I do talk about risk management on here. Platinum, it ran up. Dang it. Fix my, there we go. It's actually in an interesting zone right here, guys. I think that platinum might be a buy between 1475 and 1500. You put a stop loss in there with whatever's comfortable you, maybe that wick or less points, and run it to the all-time high anchored VWAP. That would be 147 points. So buying somewhere between in there, right? Let's put that on the chart because again, if we're bullish on metals, I think we see the all-time high anchor VWAP. It came close. So keep an eye on that. The one metal that has done very well this week is look at that. Look at copper. This is a one-day closed filter of that all-time high anchor VWAP. Technically, the book says buy the second day. So I've put in a trade plan that gives you a discount off that run up. So if we tap that VWAP and come in, I think that the entry needs to be between 575 and we'll call it 580. You could put a stop loss commensurate to your risk. Maybe it's 15 cents, maybe it's 10 cents, right? And then you can try to run it up to a new all-time high. Although keep in mind from previous reports, resistance at 595, 605 right here. Look at this. So this trade plan may only pay you to that. And that would be still pretty profitable on leverage because we're going to have to break this zone like 1, 2, 3 taps before we get up here, right? So we're not doing this week, but it is plausible we could see 6 to 605 this week. Right? So again, I like it for a buy between um, right in that zone, right off the all-time high, $5.75 to 580. And then a stop loss commensurate with your risk. Right here, I have it about 15 cents. And if you're hunting the shallow, right there, you're looking at a 26-cent reward or higher. And remember, as soon as it starts paying you, you reduce risk. Where would you reduce risk? Get behind this candle, behind the all-time high anchored VWAP, get behind the next candle, just keep trailing it up. There's exact measurements you can do if you buy my course, but that's just a suggestion here. If you're finding this useful, guys, and you're still with me, I appreciate. Please spread the word. Share this to as many people as you know that are interested in investing, so they learn about this free weekly. I put about 4 hours into this on research and then doing the report and uploading and all that stuff every weekend for the trading community, right? So let's get into our wartime stocks. You can see if the war cools off, these will too. But listen to me. We used a lot of weaponry in this that needs to be restocked. So these will cool off, but they won't die, right? Because it's going to show up in earnings reports that, hey, they're having to make more equipment. So right now, the discount entry is this green box, right? We set up a trade plan, which you could have triggered if you triggered in the green box. Again, targeting the all-time high would have been smart, although it never hit. You still might be in this trade plan or you're waiting to enter. Really good discount down at half the move on the Fibonacci, but you're going to see this spike if the war continues. You're going to see it cool off if we get, I don't know, what would it be called after a ceasefire? A treaty? Is that what it would be? Because it's not officially a war. Would it be a treaty? I don't know. Let me know in the comments down there, guys. Northrop Grumman still holding up for this trade plan down here around half the move. So somewhere between 642 and 657. And then of course, even though I have the targets back to all-time highs, the all-time high anchored VWAP is always going to be a smart first take profit or partial take profit. General Dynamics, big fall here, but that's fine. Our buy zone is lower, right? So keep an eye on General Dynamics down here. We want it to relax a little bit, and that's off based off of this pricing in the 618. We're right in the middle of half the move. So all right, let's just try and look at something. Be patient with this, guys. You got to let them fall into your zone. And then when they hit your zone, you can either buy partial or wait for confirmation that the zone is held. ITA, or iShares, is aerospace and defense, tapped right into the green box last week and bounced. I think that still exists. And look where it stopped. Look where price stopped. All-time high anchored VWAP. All right, so it's trying to get back on trend. Again, discount zone is still probably down here, guys. I would wait a little bit on this one. unless we cross that all-time high anchored VWAP and hold, then that would be a buy signal, and then you can run it to the all-time high or try to hold it to the top of to the range into new pricing. Shield, the global exit defense tech ETF, come close to our zone and now is failing. I would still hold for that. I have that alert set at 66, so approximately 67. So, um, and listen to this, guys. Palantir smacked right into my projected price. Do you remember me doing a report and saying that gold line was going to be probably the price it hits? Look what it did. Pierce didn't come back up and closed above it. So that's actually called a false break and it held. Now this is high. That's a high volume test, right? That volume spiked, but there were buyers here that saw the same thing that I saw. Most of them work at hedge funds, right? So this trade plan could be activated for you if you like it. So buying in between 120 and 125, we'll call it. And then, of course, price targets what, guys? Say it with me. All-time high anchored VWAP. That's $33 or continue to run it up. Palantir, some of the world's scariest tech. It's like Google on steroids, 1984 in an AI package. Very Orwellian. But if you want to profit off of it, here it is, guys. Yeah. And I mean, if something negative come out about this company, I mean, 100, I think is a buy also, but that zone is having, I owned this at $6, owned it from $6 to $18 early in the company. RTX, which used to be Raytheon, again, holding for this buy zone lower. It closed above the all-time high. It reopened and now it's closed above, held, closed below, or right at it. So we'll see what happens here. I would still demand a discount. And the reason why I'm saying demand a discount is, what do you guys believe? Is there a greater chance of peace than war? If the chance is greater for peace, then these are going to cool off a little bit. So demand a discount. And our final stock is the State Street Spider Oil and Gas Exploration ETF, where this 618 zone is a very attractive buy. Guys, at about one average price of 163, you're going to be above and below that to see if you like that. And then you can run it back up, right? And then certainly half the move is going to be hard to ignore, right? So we're coming into some really good discount pricing on this one. So keep an eye on it. You can buy in lots. You could buy a little bit here. You could buy a little bit here and then set your stop loss and then write it back up. Because I believe this one finds a turn somewhere in here, right? Just one, and guys, this one pays a almost 2% dividend, $3 annually, 325. So that is a dividend stock right there if you start buying in. It's good to add to your long portfolio dividend and aristocrat stocks that are going to pay you more long term. Guys, you made it. You made it through the report with me. Thank you for taking your time to invest in your learning and follow some of my trade plans. A lot of you guys are great at asking me questions. I'm always happy to add extra tickers or remove tickers. If I get enough people commenting and asking, let me know, and please share the material, and let's have a good week this week.